yo. Welcome back. What a camera right here. Welcome back, man. It's another episode of Market Mornings. I'm your host, Jay Reed. It's been a minute, man. It's been definitely a minute. I kind of got tired of the old setup. You know what I'm saying? I had a lot of lagging going on. My vocals wasn't as clear and crisp as I wanted it to be. So took some time off, man, to try to get my setup correct. But I missed you guys, and I miss all my traders. What up, traders? But we back, man. Market Mornings. Like I said, I'm your host, Jay Reed, and we're going to get into what's going on in the markets today. It's Thursday, October 14th, 2025. First of all, I want to start off with some disclaimers. This is for entertainment and educational purposes only. I am not a financial advisor. So make sure you discuss anything that I talk about or anything that you're thinking about doing with an actual financial advisor before you do anything like that, because you want to make smart moves out here. And this, like I said, this is just what I'm doing. It's for entertainment purposes and educational. If you want to learn some stuff. And you also might hear about some links or whatever. There's no pressure at all to buy. They're just creative ways to support the stream and all that good stuff. So we're gonna get right into it, man. The markets are getting whiplash today. She would be calling me. Tell her I'm on stream. But yeah, man, the markets are getting whiplash today. So we got a lot of drama going on, a lot of mixed drama. China sanctions, crypto. It bounced back yesterday, but it looks like it's crashing again today. We on Fed watch. And it's the start of earnings season. So let's get right into it. Let's go. Let's see here. Let's go right into. Let's look at some of the news we got going on here. Just a quick snapshot. The S&P 500 futures are down 1.1%. NASDAQ 100 is up. That's where all your tech stocks lie. That's up 2.8%, 1.8%. 10 years, it's in a murky level. I don't really, never really seen it recently in the threes. And gold is, man, it's at 4,100. Last time I was on stream, I think it was at 31, something like that. So it's up almost 33% in the last couple months. And the dollar is gaining strength as well, continues to gain strength. So, we got some mixed signals here. NASDAQ is bouncing on earnings optimism. I'm assuming it is earnings season. But, when you look at the broader market, the S&P is getting dragged down by like a lot of the macro effects going on, or macro environment created, and a lot of it centers around China. And the dollar and gold is back up. So that's a classic risk aversion, meaning people are moving away from risk. They're taking their market out, their money out of the market and putting it into stuff that they feel like is not going to change. And the dollar's going up because people purchase gold with dollars. So but yeah, so the 5 things to look at in headlines. We got China sanctions on shipping. Stocks fall as China retaliation rattles traders. So global equities retreated after China upped its ante on trade standoff with the U.S., stirring fresh concerns over tensions between Beijing and Washington. The S&P 500 contracts fell 0.9%, almost 1%, and the NASDAQ futures dropped 1% as well. So people are, China's not bluffing. You know what I'm saying? Trump said everything was going to be all right. China doesn't want to go into depression or whatever like that, but they're not backing off of this. First, they mess with the essential minerals, or whatever you want to call it. Now they're punishing U.S. shipping outfits. So So they're not backing off. So continue to watch that. Continue to watch what China does in that, and you know, in the shipping space. And you know, they're trying to kill any hope for future, for near-term trade relief. So you know, people that thought it, like yesterday, the market kind of thought, oh, okay, everything's going to be okay. Today, you're seeing that may not be the case. Crypto market sheds 150 billion as China hits back. So this is also affecting the crypto market. Cryptocurrencies continue to lose ground after a historic round of liquidations that triggered a sharp sell-off over the weekend. It did bounce back a little bit yesterday, but you know, when I looked at it earlier, a lot of stuff was down. The combined market value of all cryptocurrencies fell more than 150 billion over a 24-hour period, according to CoinGecko data, with Bitcoin and Ether falling about falling to about 111,000, and then below 4,000 for Ether. You know, so this is a renewed U.S. tensions. This is renewed U.S. and China tensions. You know, and people are. It's also kind of affecting the equities, with most markets in Asia and Europe in the red today. So, you know, investors are pulling back out of everything really, and it looks like they're going to gold. Gold's at 4,100. So continue to watch that. We're on Fed Watch. I don't know if I have an article on that, but we are on Fed Watch. Powell is set to speak at 12:20 p.m. in Philly, good old Philly. Well, you know, people are wondering, will he double down on the hawkish talk, or hit a rate pause? So the bond markets are already signaling tension. Like I said, the 10 years at 4%. You know, probably 2-3 months ago on my streams, we were wondering if it was going to go over 5%. So, you know, completely different landscape here. We got silver. Why has silver begun to surge? You know, if you've been following, silver is outpaced gold, and it's up 70%. But there's talks that after reaching a record $53.55 an ounce, silver is cooling down. You know, the arbitrage traders are literally flying silver bars across the Atlantic to profit from the price differences. And that's pretty wild. You know, whatever that costs is definitely, they're saying it's more, they're gonna make more money just bringing it over and trading it in. So the squeeze in supply of the precious metal, you know, like you said, it catapulted it 70% in the London market this year, compared to 55% increase on gold. So it's outpaced gold. So, but there are talks that may be cooling off, because I think people are moving into gold, you know, with the profits that they made. 70% is ridiculous. It's crazy. AI stocks are in a bubble. Most investors are saying AI stocks are in a bubble. And you know, that's kind of been fueled by JP Morgan. A record share of global fund managers said artificial intelligence stocks are just way too high. According to Bank of America Corporation's survey, about 54% of participants indicated tech stocks were looking too expensive, and feared that global stocks were overvalued. Fearing global stocks were overvalued hit a peak. You know, that hit a peak in the last survey. So the Bank of America survey showed an AI bubble was viewed as the biggest tail risk, followed by the resurgence of inflation and worries about the loss of Federal Reserve independence and dollar debasement. So, you know, there's been talks about other countries debasing their currency, but you know, people are feeling like America may be starting to do that, especially if they lose the independence of the Fed. And you know, AI has been up. You know, definitely recently it's been up, but you know, people are fearing that it's like one of the biggest bubbles, comparing it to the .com bubble or debacle, you know, in 2008. So if you're old enough to remember that, it was around that time. But if you're old, I think it was maybe 2004, 2005. But anyways, if you're old enough to remember that, a lot of people lost a lot of money. So that kind of goes with why people are hedging right now to gold and other safe havens that they feel is protected from what may come. So that's pretty much what else I got in the news here. The IEA raises its estimate for record oil oversupply. So oil is down 2.34%, down to 58.10. I think on my last stream it was maybe pushing 70 or something like that. So it's down big. Like I said, the IEA said a record oversupply of oil will be bigger than previously estimated, and the excess is already starting to build up on the build up on ocean-going tankers. So you got a lot of tankers out there with a lot of oil, so that's going to drop the price of oil. It's going to make it less attractive to produce it or to mine, whatever they do. It's just going to make it less attractive because the price is going down. So take from that what you want. That's pretty much all I got. Let me see what I got here. Big banks earnings to plug data vacuum. Yeah, so it's earnings week, and I think banks come out first this week or today or next couple of days. With the government shutdown, there's some worry. It's leaving investors desperate for a fresh read on the economy, and they feel like how the banks report is going to give them that fresh perspective. So maybe they can see what they're going to do, if they're going to pull, they're going to hedge down. Whatever the big hedge fund guys with all the money, what they're going to do. But as you can see right now, pretty much all of the banks are up. Bank of America's up 0.5%. Citi Group is up 2.3%. Goldman Sachs almost 3%. JP Morgan 2.3%. Morgan Stanley 2.1%. This is all pre-market stuff. So the market is about 8 minutes away from market start. So let's see who's on the move. Get right into that. We got let's see here. We got critical. Let's see here. Sorry, on the move. We got sorry, let me get back. We got critical metals. Critical Medicals Corp. It's up 38%. And it's riding, this is riding the China wave, as you can see here. Sorry, let me get you straight here. Make sure y'all can see this. Yeah, you can see this. So, critical metal. Let me get to where they are now. Damn. Yeah, critical metals is up 3%. Regular trading hours. Yeah, so as you can see from the close, critical metals is up almost $7, coming in at $29.70 pre-market. MP Materials is another critical materials, critical metal stock. It's up about 10%. Same thing. It's riding the China sanctions wave. If you don't know, China sanctioned all critical metals coming out of there to basically make it unattractive for you to export it, so they can keep it all and they can kind of catch up on the AI game here. Ericsson, I haven't heard this name since I used to have an Ericsson phone way back in the day. Probably, I think it might have been one of my first phones. And I think they're up off of the big profit beat. They beat estimates by 27%. They fell short slightly on the revenue, but they're up 15% pre-market. So that might be something to look at. Let me actually add them, because like I said, I haven't heard about Ericsson. I didn't even know they were still in business. Add to my playbook here. We got Polaris spinning off the Indian motorcycle. They're up 11%. Like I said, Polish shares surge on Indian motorcycle. unit spinoff and their profit forecast. So take a look at Polaris. I'll add them as well just to take a look at them this week. And we got crypto stocks. There's a lot of them. They're down 4.5%. And like I said, I'm not even gonna pull one up. I know like you got Mara. We'll just look at Mara. Mara's down about $1. Overall, they're down about 4 to 5%, and that's dragged by the Bitcoin slump. If you look at BTC right now, as you can see, BTC's no, it's not right. Bitcoin. Sorry about that, y'all. Bitcoin US dollar. Like I said, right now it's down to 110, and it was at 115 yesterday afternoon. So it's taking a little hit there. And you got Ether as well. GM, General Motors taking a $1.6 billion hit on their EV transition. So that has the stock down a little bit. And they got earnings coming up on the 21st. So we'll continue to watch them. And like I said, oil, what do we got here? Oil. The W, what is it? W, no, that's not what I'm looking at. Sorry. Yeah, oil. Oh yeah, here we go. Let me go to the oil. WTC. Really want to look at the Brent crude oil. Is like I said, we already talked about that. Right now the Brent is coming in at 62, so a little slightly up, but it's down 2.5%. Like we talked about, the IEA warns on a massive oversupply right now going on in crude oil. So man, that's the market outlook. Let's look at the heat map. Got going on with the heat map. See who's and this might be from yesterday. I don't think it's updated yet because the market has opened. We're about 3 minutes away from market open. So that's pretty much all I have for today's stream. So make sure you pay attention to, first make sure you stay sharp today. And in any, this kind of time frame, you can make a lot of money or you can lose a lot of money. Or you can just sit it and ride it out and not do anything. That's your decision. But stay sharp today. We got Powell speech that could flip sentiment real fast. Make sure you're subscribed. You know what I'm saying? I'm gonna, if you want to catch me doing some live trading, I'm gonna jump over to TikTok. And I'll be live trading on there, at least for a couple hours or so, at least till I get tired. But make sure you subscribe so you can, stay up to date with real, with the re-report. This is my first stream in a while, so bear with me, as I get used to the new setup. Hopefully, you like the sound. Hopefully you like the visuals, all that good stuff. We'll continue to be bringing you this every morning, until the wheels fall off. And put your thoughts in the comments. Is AI hype? Is it a bubble? Are you still buying gold, silver? You trading that? Anybody trading that on a prop account or anything like that? Just let me know, man. Once again, check out my affiliate link in the comments. If you're looking to trade crypto with leverage, check out some of the links in my comments. In the description. They'll take you to some of the affiliate links that I have. I won't discuss them right now. But once again, man, this was the re-report, October 14th, 2025. Jump on over to TikTok, and it's the re-report. Read is spelled R33D. And make sure you follow your boy, man. Like and subscribe. And that's it for today. Peace.